So over the next 90 minutes, we'll be delving into the exciting world of innovations that are helping. These can help us in serving our clients. This is a fantastic opportunity to get a competitive edge and discover innovative tools that can enhance our clients' experiences. So let's start.
Good morning, Mr. Arvind. Thank you so much for the nice introduction. Sometimes it causes the sleepless night. How my banker friends in the field will be able to meet the challenges, because the scene has undergone a drastic change. One has to innovate how to retain the existing customer. Product-centric approach, now it is changing. It is becoming a customer-centric approach. So based on the customer needs, customers' expectations, retaining the customers, people were coming to the bank and opening the bank, etc. But today, it is not a seller's market. It is a buyer's market. It is a customer's market. It is a depositor's market. Depository services, insurance product, selling of the mutual fund product, etc., etc. Again, the list is not exhaustive. The list is illustrative. The list will go on expanding further. Now, if a conventional banker, as an orthodox banker, I may ask the question, if I'm going to distribute a mutual fund product, so the bankers have to be on the toes. You may have to go for the stress mitigation measures, whatever it is, be it walking, be it yoga, whatever. I mean, enjoying the music. Not that, no, yes, put me on the stress, etc. for a few minutes. No, I felt very happy that the culture of this 52,67,784 crores constitutes 17.92% of GDP of India. I just tried to take the thing, but the latest data are available. If you compare it, we were nowhere near. That means you take, either the South Korea or Malaysia or Thailand, everywhere in the Asian economies, we were nowhere near. Absolutely, there is no doubt about it. India is been growing more than 7% consecutively. We are growing, and the latest estimate for 23-24 also it is 7+ that is happening. Then the second reason, main reason is and then in the name of convenience bank is going to be there. We have got the debit card, internet banking, phone banking, anywhere banking, anytime banking. That way, the technology has facilitated. This is also, there is a need of constant innovation in retail banking. I mean, without innovation, we will not be able to think. Now, luckily, banks are realizing, what is it they are realizing? Which can definitely speed up the time to market in introducing the new product and services. So the norm is now work with third parties. Now, then the third point, now wider attempts are made at what we call as digital transformation. In particular, we want to break away with the legacy system. We want to break away with the outdated process. Wallet share of the customers, you have to innovate. And if you want to navigate of the emerging economic turmoil, you have to innovate. So banks have started understanding this Taraga mantra, innovate. If you don't innovate, you will perish. So banks have also started innovating. Customization, technological advancements, technological upgradation, making available the home banking, electronic banking, cost reduction, and also what we call undersell to remain. This one remain in the field. You have to offer so many things. There is a concept of embedded finance. We keep on hearing. What is this embedded finance? Embedded finance is nothing but integration of the financial services into non-financial offering. So the banks, if they want to succeed, they also have to offer the embedded finance, that is integration of the financial services into non-financial offering. Some of the examples of e-commerce, merchants providing the insurance, merchants providing with the necessary license, the mutual fund product. Again, a coffee shop offering the one-click payment, or a department stores offering what is called branded credit card. And what value it provides. Once we start thinking, definitely we will be able to appreciate. So, as I've been saying, innovation has become a critical component of business growth, especially in the banking industry. Creation of value through new or existing products, services, or processes. Infosys has become today what it was compared to what it was in the year 94, I mean, sorry, 1976, 77. It is only because they have made it a thinking organization. Again, these thinking experiences are expanding the set of the potential financial partners that consumers and business consider using, resulting in shifting of loyalties and market share. That is bound to happen. See, when you do this, when you associate, definitely there will be shifting. Now we need to do certain things which will, through which we will be able to maintain the customer loyalty. Customers even continue to remember him, worship him, because of what he called relationship banking. He practiced relationship banking in those days where relationship banking is not required at all. So now today it is the relationship banking. If you don't keep in touch, we want to meet our customer expectation. We want our customer to experience what we call in economic as consumer surplus. We will be decided or defined by how you can think, rethink the back office operation, and which will bring the from product orientation. Now we should move to what is called customer centric, the science and engineering of making intelligent machines. It is going to, and the future is only artificial intelligence. If I technologically I am a bit behind, it is high time I should try to read some of the things. The future of the retail banking is going to make use of the AI, artificial intelligence. In addition to that, is also going to make use of machine learning. What is this machine learning? It is again a major breakthrough in achieving artificial intelligence. In achieving artificial intelligence is through machine learning, and then an advanced branch of machine learning is deep learning. What is the deep learning? Deep learning uses what is called as neurals network, artificial intelligence. This generative artificial intelligence is nothing but an advanced branch of deep learning. So it is an advanced branch of deep learning. So it is a branch of deep learning that uses exceptionally large neural networks called large language models with hundreds of billions of neurons. Models applied to interpret and create text, video, images. I should be aware of what are the developments that are happening. And it is not only the development that are happening. There are many competitors who are making use of this artificial intelligence, machine learning, deep learning, and generative artificial intelligence. IT department or the department of technology should make increasing use of it. If you are not able to do it, best thing is partner with a third party. Partner with a third party. But only thing is algorithms need to be checked and algorithms need to be periodically replaced by the patterns of happening. That is a caution that the Honorable Governor of Reserve Bank of India in BFSI meeting has made an appeal that it is not enough if you are going to partner with some of the partners, how well they rethink the bank office operations and whether the organization leaders can embrace change, because change is a thing which will remain constant. This is most applicable for retail banking, be it liability side, be it on asset side. So Again, all these things are towards which will enable you to shift from product orientation to customer centric, cash rich brands in the technology, media, and entertainment sectors capable of creating an improved user experience and hyper personalized offering to aggressively control more of the customer relationship. Again, all this should be what is important is in all this, it is not your revenue earning that is important, it is the customer experience that is important. Now, regulators are becoming increasingly conscious that in the process, customers should not suffer. If there are any customer complaint, regulator will impose a heavy penalty. So we should always see that our efforts are resulting in customer surplus, customer centric, customer ecstasy. All these things we should ensure. Then winner takes all. A wave of consolidation results in few mega banks and fintech companies ruling the banking landscape. See, this is what they predict. So to remain competitive, to remain in the thing that we don't lose our identity, we need to act fast and then do this. Massive technology enabled institutions generate a competitive advantage through the scale. So scales are important. If we are not able to invest much in technology, it is necessary that we then customers gravitate toward the largest personalized and convenient platform generally, because with the demographic dividend India experiencing and the number of people who are below the 30 years 35 years are increasing, who want quickly as WhatsApp, and the supervisory regime also favored smaller and local banks, and sentiment gravitate toward the nationalistic protection. So definitely, if they in the process of being bringing the technological advancements, etc., you lose the customers, you lose the customer convenience, and if you lose the trust of the customer, definitely customers will not hesitate to shift. Then the rise of central bank digital currency, this is also the use of the cash will continue alongside the central bank digital currency will also come. That has come, and it was predicted earlier, it has happened. They have redefined the capital form, virtual sales assistance, and contact-like process for completing the customer borrowing journey, and machine learning based banking analytics for the position of the country with the high number of the smartphone. Customers are now accustomed to the executing the complex tasks or transaction using their mobile phone. Mr. Arvind Mohan, during the course of his initial, he said that mobile first he mentioned. So lenders must not add as mobile one of the channel, but also they should come out with the product tailoring customer journey and meeting the customer expectation. That is what is very important thing. Okay, then as we move further, unstructured lending across financial institutions and post the COVID waves, transition away from the traditional underwriting data sources through primarily two main modes of operation. I'm sorry, this screen is incomplete. I will arrange to send you this in full, this one. Then data transformation and leveraging the advanced analytics. You make use of this when you want to collect. COVID has taught us a lesson. So reduction in collection efficiency due to restricted personal movement and limited availability of the physical collection channels were the key challenges by the small lenders. So they have transited toward the digital payment collection and technology initiatives, which are AI driven virtual chatbots, again, contactless collections, again, virtual servicing. The pandemic has also accelerated the growth of contextualized remote servicing for borrowers to reduce the overall time for customer query resolution. FIs are looking to leverage on the customer data analytics and extensive product which are customer driven segmentation will also be made use of to provide services in a most effective way. Innovations for contactless or less contact operation, social distancing translate into restriction on mobility and ways of both the customer's employee, resulting in increasing preference for contactless banking and remote working. Again, history has taught us a lesson, started globally, some of the best practices that has been used. I think this is Aadhaar and video customer identification, making use of the artificial, and then contactless authentication and payments. These are all the some of the things. Again, some practical examples in retail banking. It is piloting the facial recognition. India has also it has come. It is no more a. No, I won't say it is not available in India. In addition to making payments which are contactless, the technology has also decreased the transaction time by 75%. Ladies and gentlemen, I would like you to note it, 75% of the, it has reduced the transaction time. Contact centers continue to be critical for managing the complex. This is going to happen in India. It is happening. It will also happen in a massive scale in India thanks to the innovations in retail banking. High time we should make use of these GA-based solutions, etc. Again, a leading global bank collaborated with a telecommunication player to develop Internet of Things solution for trade financing that helps track goods in real time and trigger automatic financing or payment instruction. Another Asian bank with a constructive electronics conglomerate offer a low-cost financing to its distributors with a limited paperwork and data privacy localization. Then they may also engage in discussion with the government and regulators on required policy changes. The teams which will first line of defense, second line of defense, etc., etc. Strategic partnership with the fintech companies can help to certain extent, but you need to have what is called native intelligence also.
It is on leadership skills and inspiration from water by Dr. Farid Ahmed. Fourth Saturday, that is 27th of April, we'll have a webinar, Operation Risks During Fifth Industrial Revolution by Dr. K. Srinivas Rao. He is a adjunct professor on risk management with Institute of Insurance and Risk Management. The doors for so many other things, so many other opportunities. And that is the beauty of this. I have introduced two more kind of memberships also, which is one is basic, in which you just attend the webinar. There is nothing more than that. It is a very low cost option.
Why it happened? It happened only because of continuous innovations in the payment system. Payment landscape in our country is today a different story. But what is experience? Earlier, we used to talk about customer satisfaction. What is the consumer preferences? What is the consumer behavior? Where he is spending? All this analytics, that is very, very important. And this is a continuous process. That is why banks are today talking that we will have to create a digital bank within the bank.
And I would like to have a feedback on that, because I am, Kalia sir was and Sundarajan sir were talking about that artificial intelligence technology. I am actually using that. So the things are advancing, making things very easy for me, but at the same time, opening up many, many possibilities. And as Kalia sir had once told me when we were introducing union experience in
one major problem which they are finding right now, managing these type of accounts. We can also scale up this topic by inviting people who are actually facing these issues and finding out solutions with our experience, how these problems can be addressed too.
And I would also thank Kalia sir for the value additions that he made during his supplement, and to Unnikrishnan sir for his address. Thank you so much, sir. Thank you. We come to the end of today's session. Namaskar.